Hey, what's going on? My name is Detron Hammond, and I am the owner CEO here at NBSC Solutions. This course is all about how you can restore your credit using AI. That's right, how you can restore your credit using AI. So AI is the big thing now. So it's the thing of the present and the thing of the future. And this is a unique tool to help you be able to restore your credit, because now you got systems of AI technology and stuff, which is pretty cool. When I got started in this industry, I ain't had nothing but a piece of paper. I had to download credit reports myself. I had to do a lot of stuff. But this video, we're gonna go through how to use AI, and we're gonna go through how to read your credit reports. But before we get to the meat and the potatoes of it, we got to start with the basics. All right, you got to know what's a credit report, what is credit, how is it utilized, what are your credit scores, what are some things you can do, what are some things not to do, because these are some basic information that you should know before just going in and starting disputing irons off your credit file. Because sometimes doing that, it can cause you to get sued by creditors. You might end up sending the wrong letter, or you might end up wiping out the whole file accidentally, right? But I want to teach you the basic steps of what is credit before we get to the good part. All right, so if you guys ready to get on this journey with me, let's go. All right, so how to repair credit using AI. Now, first thing first is, what is credit? What's credit to you? Now, credit is where the definition of credit is the ability to borrow money under the agreement that you'll repay the debt later. Now, this definition actually came from Experian. Credit agreements typically come from repayment terms that includes when payment will be due, plus any interest and fees you will need to pay. Credit can also refer to the individual history of borrowing and repaying the debt. All right, now another definition of it is the ability of the consumer to acquire goods or services prior to payment with the faith that the payment will be made in the future. And that pretty much saying that, hey, well, in layman's terms, if I loan you something, and if you don't, guess what? Your credit with me will be bad. That means that if you try to come to me in the future for services or goods, then I will no longer trust you because you didn't keep your word and you didn't keep the agreement of paying me back. But however, if you reach out to me and I loan you some money or any type of services or goods, and you honor the agreement and you pay me back on time, guess what? Now you have established good credit with me. So if you come to me in the future for anything else, I won't have no issue loaning that out to you. All right, so that's what credit is all about. All right, so it's always important that you have good credit, because when you have good credit, it can take you so far in life. All right, but that is credit. So make sure if you got them debts out there, make sure you go ahead and try to pay them and keep paying them on time. All right, if you can. Now, I understand life does happen that can prevent you from doing that. All right, so that's another reason of the video. So in case that does happen, I can show you how you can resolve it. All right, but just don't make it happen. All right, cool. All right, moving on. All right, so the importance of credit scores. All right, so credit score, it is important. Okay, so credit scores are also placed on the credit report as well. Companies use credit score to make decisions on whether to offer you a mortgage, credit card, auto loan, and other credit products, as well as for tenant screening and insurance. Yeah, some jobs require you to have good credit. Okay, some apartment complexes require you to have good credit. So that's why it's important to have good credit. But these are some things that you should know before going in and fixing credit, so that you can get a better understanding. Why are you fixing it? And then we're going to talk about the derogatory items as well later on down the line. All right. And they're also used to determine the interest rate and the credit limit that you receive. All right. So we're going to get into that. Now, understanding the credit scores. Sorry. So there are two types of credit score. So you have the FICO and Advantage. FICO scores ranges from 300 to 850. Vantage score ranges from 400 to 900. Okay. Now, most banks gonna pull from FICO score. All right. but I'm about to get into the difference between FICO and Advantage. FICO and Advantage Score Solutions are two competing companies. Each one creates and sells credit scores to lenders and other businesses in the financial industry. Okay, FICO is a publicly traded company based in California. The analytics company was founded in 1956 by engineer Bill Fair and a mathematician, Earl Isaac. All right. Vantage Score Solutions, based in Connecticut, was jointly founded by Equifax TransUnion Experian in 2006. And what happened was a lot of banks were using the FICO score. And so the credit bureaus came together and said, hey, well, we need to have our own score model. And Vantage Score pretty much really for educational purposes. You might pull up a copy of your credit file with the credit monitoring, and you might see your score, let's just say it's 700 across the board, right? And those are your Vantage scores. So you got Vantage 3.0 and you got Vantage Score 4.0. And then you might go to a dealership and they might pull the FICO score, okay? FICO score, like I said, it ranges from 400 to 850, 300 to 850, excuse me. So what happens is, let's say you had a 700 on the Vantage score, you could be possibly between, on the FICO model, you could be roughly around 680, 690-ish. And what makes those score modules different is that they read things on the credit file differently, right? Like I think on the Vantage score side, if you have a collection or medical bill, well, they both shouldn't be on your credit. Well, the medical collection, if it's on a $500, it shouldn't be on your credit file. But if you have a collection under, let's just say $100, right? So the credit bureaus on the Vantage Score side may not read that as, it may not affect you as much as far as points, but on the FICO side, it can affect you. All right, so different score models do different things, but always remember. So I want you to know this: there's no such thing as a set credit score. So if someone asks you what's your credit score, you don't know. You kind of got an idea what it possibly could be. Even if you pull it with the credit monitoring that pull your FICO score, no one has a set credit score. You have data, okay? Because data constantly changes. All right. You might be at an 850 one day, and the next day you might be at an 820, and you might not have done nothing negative to hit your credit. So that's why the data changes. So you don't have a set credit score, but you kind of got an idea where you are. All right, moving on. Now, the minimum scoring criteria. So we're going to talk about the Vantage score and the FICO score. All right, the criteria that meets those two. So to qualify for a FICO score, your credit reports needs to display a trade line. Now, let me tell you what a trade line is. Any account on your credit file, if it's an auto loan, a mortgage loan, business loan, credit card, or any type of installment loan, those are considered trade lines, right? Now, a lot of us call those accounts, which they are accounts, but the proper terminology for those is trade lines. All right, so trade lines, like I said, credit card, loans, line of credit, etc. That's a trade line, all right? So trade line, that is a minimum of 6 months old. All right, so that's what you have to have on your credit file in order to generate a FICO score. So these are some things that you should know before you go in talking about you want to remove inaccurate items off your credit file. All right, so these are basic information. So by the time you get to a point where it's time for you to start disputing, then you'll have an idea of what to do, because you don't want to go in there and just start disputing everything that's derogatory, okay? So some accounts, for instance, if it's a collection account and it's been on there for about 5 years, of course, the credit bureau give you a credit score based off the status and the history of that account, right? So if you turn around and possibly remove that collection, what happens is that history that's attached to the collection is going to leave with it, and it can possibly cause your score to decrease. So keep that in mind. You also have to have at least one trade line on your credit report that shows some activity in the last 6 months. Those are two of the requirements to have the FICO score model. And with the Vantage scores, where the credit bureau pretty much said it, we're going to keep this easy. Your credit report simply need at least one trade line present, regardless of the account or the age of the account. All right. Credit bureau said they ain't trying to do all that. They want to keep it simple. All right. But I wish everything was simple when it comes to the dispute process. All right, let's move on. All right, so understanding your credit scores. Now, I'm going to read this. So there are a lot of factors that goes into your credit score. Your score will also vary depending upon which credit bureau the lender decide to use for your application, meaning that all lenders don't pull all three. That's why you have three different scores, right? Some lenders reports to all three bureaus. Some lenders only reports to one bureau at a time, all right? So you got to understand how it works. Now, your credit score. A credit score is a number generated using a formula that is meant to predict your credit worthiness. Credit score ranging from 300 to 850. Remember, that's in the FICO model. The higher your score is, the more likely you will be approved. The lower your score, the less likely you will be approved, right? So you always want to get those scores up as high as possible, okay? Your interest rates will be much higher than someone who has great credit, right? Having a high score will save you thousands of dollars on some of the most important purchases of your life. And that's true, especially with a car. If your credit score ranges between 580 and maybe 620-ish, your interest rate could possibly be roughly around 20 to 25% on an auto loan. And that's crazy. But if your scores was at least a 660, or of course we know 850, your interest rate could range from 0% to 2, 3, 4, 5, 6% on an auto loan, and that's good. Okay. Now, of course, you have three main credit bureaus. You got Equifax, TransUnion, and Experian, which Equifax being the oldest bureau. All right. It's pretty much based out of Atlanta, Georgia. Experian based out of Texas, and TransUnion is out of Chester, Pennsylvania. Now, there are 5 factors of your credit file that makes up the credit score. All right, you have to know this. This is important. So, 35% of your payment history is, 35% of your credit score is your payment history. All right, so that's why it's very imperative that you have a strong payment history. That's very important. Okay, so you got to make your payments on time. Try your best to make them on time. All right, 30% of your credit score is the amount that you owe. So you got to be careful with your debt. Try not to overextend yourself. I see that a lot. 15% of your score is your credit history. 10% of your credit score is types of credit. If you have mortgage loan on your credit file, auto loan, or credit card, those are different types of credit. Credit is your credit card, that's considered revolving credit. That can be either short term or long term, right? So we hoping that that's long term for you. We know mortgage is long term credit. A mortgage will run you between 15 and 30 years, depending on the type of loan that you have. A regular auto loan, not auto loan, but a regular loan, like a personal installment loan, we know that's 6 months, maybe 9 months. That's like temporary. All right, and then applying for credit. You always want to use your credit wisely. All right, so you don't want to go out there and just be applying for stuff because the bank keep telling you you're approved, right? So most bureau only really the recommended increase on a credit bureau report, need to be at least 3, maybe 4, but maybe at least 3. All right, so you don't want to get too many increments on your credit file. Now, I know a lot of times when people going out to buy a car, they will send your credit to multiple lenders, but the laws of that has changed. If they do, it only affect you 1 point. Okay, so you can have 20 different inquiries on your credit file with one bureau for the auto loan, but it's only going to affect you one time within the 45-day grace period. All right, and they do that because they know when you're going shopping for a car, you're going to go shop for the better interest rates. You're not just going to go for the first thing you see or the first interest rate or the first offer. So they know that the bank's got to pull a cut. Each bank have different, each bank have different interest rates. You know, if you got one bank that approve you for, let's say, a $30,000 car and they give you a 20% interest rate, you pretty much know your payment's going to be high. But you might have another bank that approve you for a $40,000 all along, but with the 5% interest rate. So you might want to go with that bank. So, it's okay to go ahead and shop around, right? Now, if your credit score within the range of 300 to 619, that's considered poor. 620 to 659, that's considered fair. Good credit is considered 616 and 719. That great credit is 720 to 749. And excellent credit is 750 to 850. Now, what I tell my clients, and I know everybody is different. Everybody wants the 800, 850 credit score, and that's cool and all. But if you have a 700 credit score, it's just as good as 800 credit score. I mean, it both considered between great and excellent. The interest rate pretty much going to be the same. So if you can't get past the 700 mark, no worries, so you're still going to have a pretty good interest rate. Now, I want to tell you this. Now, the bank don't always go by credit score that makes sense. Well, the credit score is not the only thing that they go off of, right? So remember these 5 factors that we just talked about: the payment history, the amount that you owe, the credit history, the types of credit, and applying for credit. And think about it, it got to make sense. So the reason why they don't go based off of scores, because let's just say you have an 800 credit score and you try to, you go and apply for an auto loan and you want this, what's expensive? A BMW i8. We know those brand new, run you about 120, 150-ish, right? But if you make $30,000 a year, right, ain't no way the bank is going to approve you for that auto loan, even though you do have a great credit score, because if you make $30,000 a year and that car is $150,000, that's like 3 times your salary. After you pay your rent, groceries, your other expenses, you won't be able to afford that car note. And the car note on a $150,000 car, even with a low interest rate, you probably looking at roughly close to $2,000, if not more. So it has to make sense. So don't always think that because you have a great, good, or great or excellent credit score, you're going to automatically get approved for funding or get approved for an auto loan. So it has to make sense, right? So if you have a good credit score, your credit report has to match what your credit score is saying. So, keep that in mind. All right. So now, the reason why I'm telling you this, because I know a lot of people, they juice up their credit file with a lot of authorized users, and they don't have, when the lender actually pull their file, if they don't have nothing on the credit report showing that the person who actually applied for that funding or for that loan, they don't have nothing on the credit report showing that they know how to make their payments on time. They just got authorized users line on there where they are piggybacking off of the primary card holder. So what happens is, if the bank decides to approve you, then your interest rate will be higher, and then you're probably going to be required to bring something to the table, and the risk level is going to be high. All right, but that's all I have for this segment. But we went over credit scores. We went over the types of 3 bureaus: Equifax, TransUnion, Experian, what it takes to make up a FICO score, when was it created. All right, so those are some of the basics that you need to know before servicing a credit file. But other than that, I hope you guys got some value off this video. All right, there's more to come, and just sit still and hang in with me. I'll see you soon. Peace.